So here we go, it's a new week in the stock market and it's another busy week. So I've tried to put together the things that you need to know going into this week and some important things to be looking out for. And also I've put a lot of stocks in this video and some little bits to do with them because there's a lot of stocks that are going to be making some interesting moves this week. So hopefully this video is useful. Now if you're on the Patreon, just so you know, I did drop an exclusive video on there. That was a stock request. So that's where the guys on the Patreon on the Discord get to vote for 3 stocks for me to take a look at. And today we talked, on that video, we talked about Gang, Callaway, or Top Golf Callaway now after their name change, and Hotel Chocolate. So if you're on the Patreon, check that video out. If you do want to join the Patreon, see the 2 exclusive videos a week, the link is in the description. But we'll get stuck onto what are the key events that are going to happen this week. At the moment, pre-market looks pretty flat, but I am recording this video at 6 a.m. so the market doesn't open for a while, so it won't really have decided the day or the way that it's going to move yet this week. So we'll see what happens there. First little bit of new information that came out only a few hours ago. Notice this one, I think just as I was going to bed. There's rumors that Facebook are planning major layoffs this week. So why has that suddenly come out? Why has that come out when Facebook or Meta have already reported earnings, not last week, the week before? And we know that led Meta stock to absolutely nosedive off the last bits of earnings. Why are they doing that now? Well, without doubt, what's happened is when Facebook or Meta brought out these earnings and then the share price decided to nosedive 28% or up to the peak now, 35%, there would have been a serious meeting. Without doubt, Mark Zuckerberg, the board would have had a serious meeting about the share price and the share price dropping. And without doubt, they would have discussed the market's concerns about the profitability dropping massively. And without doubt, they would have said, we need to sort this out. We need to react to the share price dropping. We need to, please Wall Street and investors a little bit. What's the best thing to do? Well, we need to start getting our profitability back up. And the amount of hiring they took on last quarter has just been totally reversed. And hopefully this drives profitability back up in Facebook. And by doing that, cutting loads of jobs. So we'll see how Facebook or Meta reacts. We'll see what Wall Street thinks of this information. At the moment, there's no pre-market data out for Meta, but I think it'll be interesting to see what the market thinks of the rumour that Facebook are going to look to cut some jobs. So that's probably a thing to look at, or a little side story that's a little bit funny, that that is without doubt Meta having a massive reaction and having a massive meeting on how to rectify the falling share price. So that was something that I noticed a few hours ago that came out. Also something from last week, you might have seen the employment data. The employment data actually came in just about as perfect as it could for investors. And this is actually probably why we had such a strong day on Friday. Friday was a pretty good day on the S&P, pretty good day on the Nasdaq. And what happened is the unemployment numbers came out a little worse than what was expected. So the consensus was actually 3.6 and it actually came in at 3.7. So a little bit worse than what people were expecting. Now this is actually really good because this was a bit of a lose-lose situation for us on Friday. If it came in better than what was expected, that would suggest the economy is still, doing very well. From the Fed's point of view, they'd have gone, okay, we're raising interest rates, the economy is still staying strong. This is, really good. However, if it came on the massive negative side, if it came in at 3.8%, that would have shocked everyone. Everyone would be like, okay, the economy is deteriorating, the employment's going up, and one of the key things for us to not have a major recession is for the employment not to go crazy high. And if it came in at 3.8%, that might have spooked a few people in the other way of like going, that moved massively in the wrong direction, and that went up 10%. So we didn't want that to happen either, but it just went up nicely to not nicely because it's not great for anyone to lose their jobs, but for Wall Street and investors' point of view, 3.7 was the ideal number because it was like, okay, the economy is getting a bit weaker, unemployment's getting a little bit higher, so that means the Fed might cool off a little bit because they can see the economy's getting a little bit weaker. At the same time, it didn't get crazy weak overnight that everyone's then panicking going, okay, it's getting crazy weak. So that was actually the perfect number for Wall Street investors, and that also I think was a really good reason why we saw a decent day on Friday. So that was actually pretty positive, that worked in our favor. And that leads us on to the next bit of data, and it's the inflation data, believe it or not. It's come around again, and we're going to get the next set of inflation data on the 10th, and this will be the inflation data for October. The consensus is to be at 8%, so that would be a bit of a small drop, continuing the small drops that we've currently had. And you'll see here that we peaked still at 9.1%, so that's still moving in the right direction. This is a bit of a one that I'm a bit 50-50 on. Obviously, this is not a major decline that we're still having. No, it's not, inflation isn't dragging down very, very quickly. And when it's only a 0.2% decline, that leaves you for not much margin for error. So if that comes in at 8.1, that will probably spook investors. If it comes at 8.2, obviously then investors are going to be saying, well, inflation is definitely not coming down. Then you look at the Fed. The Fed are obviously going to be thinking, okay, this is definitely not working. We need to carry on, putting the interest rates up. And I think one of the key things that we're going to have interest rates come down is obviously the inflation to come down. So if we want interest rates to come down, to 0.5%, this needs to still come down. So anything with an 8.2, the market will tank. Anything with an 8.1, the market will tank. I think generally if it hits consensus of an 8, I don't think the market will be happy unless it sees a 7 in front of it. So we'll see what happens there. My only little concern going this time round into this inflation data is oil's actually been creeping up a little bit recently. You might not have noticed here, but through the month of October, it wasn't terrible, but it did pop up towards the back end. So you can see here, it rose up a little bit and then it was basically flatline and it had a bump up towards the end. So oil wasn't really much in our favour this time around. So we're definitely relying on other things like, rent, food prices. So yeah, that's a number that I'm not sure on going into this time round. And my feeling is that the market will probably drop on the day of inflation data because I think that unless we get a 7 in front of it, the market won't be happy anyway. So that's all the key data point of views that's going to be coming out. The next thing is earnings. So we've had peak earnings, but we've still got a lot to go. Starting with Monday at the open, a big retail stock, Palantir, they report earnings. So that's going to be an interesting one to watch. Personally, I don't own any shares. However, I'll keep an eye on it. It's an interesting business. Never got me over the line because of the valuation. But it's been dropping a lot recently. And I'll keep an eye on it. And that's obviously an interesting one for retail investors. After the close, there's a few like Lyft, Activision, Blizzard. Obviously, that's going to be potentially merging with Microsoft if it gets approved. SolarEdge, Take-Two, Clover, TripAdvisor. Not too. I'll probably check out Activision's numbers, but not too big for me. On Tuesday, big one for me, Disney. They're going to report an earnings. So Disney's an interesting one. I'm not sure what Disney's going to do because obviously we should have some okay park numbers. The other thing is Disney Plus. What's Disney Plus subscribers going to come in at? Is it going to come as good as what Netflix subscribers come in at? However, it didn't. As far as I'm aware, Disney didn't have as good shows as it did last quarter, and that really helped boost the subscribers. Also, Netflix had a pretty good quarter with their shows. So did people potentially switch across to Netflix? Did they take some share off Disney? Did Disney still come in quite strong? So I'm a bit unsure what potentially Disney will come in at this time, especially the Disney Plus numbers. I don't know if they could be a little bit weaker than what they've been previously because they've been on fire. So I think that's probably the key thing that will move the stock. So we'll see what happens there. But at $99, I think Disney is a very good stock to consider. So that's probably the key one for me. AMC, Upstart, Plug, Lucid, Affirm. So those are some of the ones on Tuesday. Wednesday, Trade Desk, Roblox, kind of big growth. Fiverr's one that I was actually interested in. I actually did a bit of a deep dive into it. I looked at it, I thought the valuation is still a little high considering if they're going to grow in the teen range. I also looked at the losses. I can't remember exactly if this is the correct company. Potentially they might have took a little bit of debt on recently. So that put me off Fiverr. But it's a growth stock I'm watching because I think the service they have and I think the growth in the sector will be very good in the next few years. So I'll be checking them guys out and seeing if it does have a drop off earnings. After close, we've got Rivian, Digital Turbine, Win. Win's actually really interesting. It had a fantastic week last week, 15%. Came out that Tilman Fertitta bought a stake in the business, which is interesting because obviously he's a very big expert of this area, especially with his experience in Golden Nugget. And if he's potentially buying a stake in here, he's obviously looking at this one thinking, okay, this is undervalued. And I would generally look at this and think, I agree. you look at the US part of the business here, it's absolutely performing amazing, and it looks like Vegas is still performing very well at the moment, considering the environment that we're in. The only thing that's kind of killing it at the moment is the Macau. The Chinese at the moment, keep locking down quite heavy. Zero COVID policy. I just said the C word. That's probably got me YouTube not pushing the video out there now, but never mind. Obviously the zero policy that they've got. Obviously that's affecting the Macau numbers. Macau needs to come back. So at some point China needs to stop doing that because it's killing the economy. So at some point it's got to open up, and you look at it, $70, and you think it's not a bad opportunity, and I can understand why he kind of thought, it's time for me to buy some shares in this one. So yeah, that's it. I will be checking out their earnings for sure. We've got Win Resorts. Unity, we then have some Beyond Meat, a stock that I own, and I've got to say, and I've made a video about this 2 weeks ago, out of the stocks I own I think just over 30 stocks. Beyond Meat is the one stock that I look at in this time period, and there's been a lot of stocks that have been hit because we're in a bear market, we're in a stock market crash, we're in the worst market for 40 years. There's a lot of stocks that have been hit, especially the growth stocks that have been hit, and there's a lot of them that I'm looking at and thinking, okay, the share price is going like this, but the fundamentals are going like this, and it's just an amazing opportunity. Unfortunately, Beyond Meat is the one stock in my portfolio that I own that I look at and go, okay, the share price is going like this, and it deserves to go like that. It's the one stock that I'm looking at in my portfolio that I'm worried about how it's going, and I'm a little bit worried about management. I think the execution hasn't been good enough in the last 12 months. And it's frustrating because I think the Beyond Meat product is actually really good. I have the Beyond Meat product quite regularly, sorry. I think it's a good product. And last year, there was a lot of optimism around Beyond Meat. We came out, the food service was absolutely amazing. You looked at the revenue growth; it was moving back in the positive direction, 32% year over year, which was really good. You looked at the food service; look at that, 218% year over year growth. The gross profit was 31%. These guys were clearly on a path. Just the EBIT was only a loss of 2.2 million. This was on a really good way of keep putting growth in, keep the gross margins up, start pushing into profitability. They landed loads of new partnerships, add them in. That will increase the revenue food service part of the business. The Pepsi deal was really interesting, and then we go a year later, and the business is obviously being hit by the environment that we're in. Negative 1.6% year over year growth. Also, the brand deals clearly haven't worked as what they should have done. And then obviously what's happened as well is they've unfortunately killed the margins off to support these brand deals, and they've not been successful. And you look at some of the brand deals, the gross profit margin now has gone to negative 4.2%, and that was off what we just spoke about a second ago, which was gross profit margins of 30%. So basically Beyond Meat is making a product that loses money, which you're never going to have success if that's the case, and it's just terrible. And unfortunately management have made decisions that clearly I didn't weigh up the downside and the risk, and were very clear about how much impacts taking these brand deals were going to have on the business, and then it has the no reward on the revenue side of it either, which isn't great. So yeah, this is a stock that I am certainly the one stock in my portfolio that I think is underperformed and financially underperformed, and I'm not very happy with the performance of it, which is disappointing. So we'll see if there's a bit of a turnaround on the cards there, but unfortunately I go into the earnings with not much confidence. So the next one is Celsius. Celsius, on the other hand, is a stock that I own and has been absolutely amazing. The stock has been delivering amazing since I have been really added into my shares. I can't remember exactly what I'm personally up. I think I'm up like 60-70% on this position. Obviously this year it's been, fortunately enough, one of the stocks I've actually sold for profit this year. Not sold it all, but trimmed for a little bit of profit. And you can see here in the last 6 months it's up 100%, and it kind of goes into that category of small caps and mid caps that put a bottom in a couple of months ago. It's one of them, and obviously the stock's been doing really well. Look, I'm looking at Celsius. Obviously, financially, it's the opposite to Beyond Meat. Financially, they've been delivering amazing. Net income's up 174%. Revenue is up 136%. It's just turned profitable. I do think it's a little bit of the richer side of the valuation. And personally, for me, I can't buy. I need to see it, back down to probably the $50 range for me to be buying it. However, I'll look at Celsius and see if the story still continues, and hopefully we get some news on what's going on with the Pepsi deal. Hopefully that transition to the Pepsi distribution hasn't upset the financials that much. Be good to hear about potential international growth. Someone mentioned a while ago that they've noticed that Celsius have stopped selling on Amazon UK. Potentially that's a switch over while they move to that Pepsi distribution side of the platform. So yeah, I'm looking to hear more information about how that Pepsi deal is going and see if they still put in really strong numbers. So yeah, that stock's been doing absolutely amazing, and hopefully we'll get some really good information from that one still. We've got Coupang, Ring Central, Neo. Neo is interesting. I think that valuation has really come down to a bit more of an attractive place right now. If I wasn't a bigger fan of Tesla than Neo, maybe consider that one. Yeti, AstraZeneca, Six Flags, WeWork, Matterport, Doximity. I actually really like that platform and that stock, so that's one I'll be keeping an eye on. And that's basically it here. Now obviously I only ever talk about the ones that are on this image, and sometimes people go, oh, but what about so and so stock's reporting? Yeah, it potentially could be, but it's not here, so I'm not going to talk about it. But there's one obviously important stock that I want to talk about that's not on this list, that obviously I talk about quite a bit on this channel, and I know a lot of you guys are interested in this one, which is HIMS. So HIMS are going to be reporting earnings this week, and in fact they're reporting tonight, so we'll have this information very soon. So I know a lot of you guys will ask for a video on this. It depends on the earnings, it depends if there's a lot of news in that earnings, and it depends if there's a big share price movement, either to the upside, either to the downside. If there's a lot of information in there, if there's a big move to the upside or downside, I will talk about that. So we'll see what happens here. My thoughts going into earnings is that, once again, I'm going to say this very much like what I said about DraftKings. I'm not really bothered about what happens on the share price. The big thing for me is fundamentally seeing this business is still moving very much in the right direction, as this business has. It's been one of the best performing stocks this year financially. It doesn't have that much recognition on the share price. You can see here, it's been on a bit of a run, like a few small caps and mid caps, but it has had a bit of a pullback recently. And when you look at HIMS, if we go off the last earnings, there was a little bit of a miss on the EPS by 0.01, which is nothing. Revenue was a beat by nearly 10 million, which was absolutely insane, which was 87% year-over-year growth. They raised the guidance, and these were absolutely fabulous earnings. On the day, they actually had a bit of a pop, and you can see here we had the pop of the earnings, and then we went from $7 after these amazing earnings down to like $4.29, and it's just one of those that I'm not really bothered about where the share price goes, because of the last earnings off August the 8th, this share price shouldn't have gone down to $4. They basically came out and said that we're going to hit EBITDA profitability in the next 4 quarters as well. So you're going to have an insane growth stock that's going to be putting profitability in. It's absolutely insane. This stock should have nowhere near gone from $7 back down to $4, nearly touching $3. It shouldn't have happened, not off these earnings. But the market is going to do that sometimes, and that's why I'm not following the share price. I'm not following the share price. I'm going to follow the financials, and the financials this year have just been absolutely insane. So I'm not too bothered what the reaction is going to be on that point of view. I'm going to be staring at the financials. Now the financials itself, they're expecting 75% year-over-year growth. The EPS is a bit all over the place. On Seeking Alpha, they're expecting 0.06. On Yahoo Finance, they're expecting roughly the same revenue, but they're actually expecting 0.1, which would make more sense because that's what they did roughly previously on the last earnings report. I think the key thing for HIMS is obviously growth is obviously the really important thing. I think that's the first number that you're going to be looking at. Next thing is the EPS. I think if they can, they said that potentially they could see them start to move EBITDA profitable as soon as the Q4. So if we do have a very good beat on the EPS, that's the next key thing. And I think, to be honest with you, I think that's what I could see Wall Street reacting on the share price, is maybe the EPS side of it. So that could be the key mover for HIMS. The next thing is outlook. I don't think they'll give 2023 outlook. We'll see what happens, but also guidance as well. If we look at the guidance point of view, obviously last quarter they hiked the guidance up, so I don't think we'll see a guidance hike from HIMS this quarter, just because we've seen so many already this year, and especially in the last quarter, this might be the one where they kind of leave it and then potentially have a nice little beat towards the back end of Q4 when we get that around February time. So I think that is probably what we will see. But if we do have a guidance hike once again obviously we'll take that. So yeah, that's probably my thoughts on Hims really. We'll see what happens. Obviously we only have to wait a few hours for that one, but yeah, I know a few guys will be thinking about that one later anyway. So I hope you enjoyed the video and some things to know for this week. A lot of things going on once again, so hope you enjoyed the video. As always guys, hit that like button if you're new around here, subscribe, and I'll catch you in a bit.